Hello friends, we'll be discussing another illustration which is a comprehensive problem for ratio analysis itself. This will be something related to finding out the missing figures itself, but here you won't know what exactly you have to find out. You will have to go through the whole process of finding it. So when we speak about missing figures, we basically know what exactly we need to do. We have a specific format where we need to put in these values. But here in this illustration, there will be something different that you'll have to find out. Based on the kind of ratios that are provided there and the details that they're provided here, according to that, you have to go ahead and prepare the statement format. Like it can be a trading account, it can be a profit and loss account, it can be a balance sheet, or it can be a combination of both profit and loss account and balance sheet to be made together. So that's what we will understand how to go ahead with such problems now. So let's try and figure out the items. So they've mentioned down here that with the help of the ratios and the additional information that is provided down there, we have to prepare the trading account, profit and loss account, and we have to further prepare the balance sheet as well. So let's figure out what do we basically have in our question, like what are the kind of ratios that we have. So the illustration has been mentioned down here. Let's figure out what do we exactly have. So we have gross profit ratio as 25%. We have net profit ratio as 20%. We have stock turnover ratio mentioned as 10. We have net profit to capital, that means net profit upon capital ratio is 1 upon 5. We have capital to total liabilities, that means capital upon total liability, if we calculate that is 1 upon 2. We have fixed asset to capital, the amount or rather the ratio is 5 upon 4. Fixed asset to total current asset is 5 upon 7. Fixed assets are worth rupees 10 lakhs and closing stock is worth rupees 1 lakh here. So with all this information, we have to further go ahead and prepare all our data or all our calculation based on these data or rather this information. So let's figure out what exactly we will be preparing or what are the kind of ratios that we'll be dealing with. In this sum as well, we'll be preparing an interim balance sheet or interim profit and loss and balance sheet statement to make you understand which items have been already covered. So to start off with this, we have two informations which are very prompt and very basic. First being the capital account as 10 lakh rupees. So the capital account being rupees 10 lakh, that means the amount which is related to the capital which has been employed is 10 lakh rupees, and then the closing stock which has been mentioned here as 1 lakh rupees. So with the kind of information that we have here, that means fixed asset upon capital is 5 upon 4 and fixed asset upon total current asset is 5 upon 7. These two details have been already provided to us. In addition to this, we have fixed asset amounting to rupees 10 lakhs, which has been already mentioned. Now, using this as a binary information here, we'll be going ahead and trying to figure out what are the missing figures, like when we use the ratio fixed asset upon capital, and if you already have fixed asset here, we'll be able to understand how much is the capital value that will be included in this solution. So just to give you a brief example, fixed asset upon capital is equal to 5 upon 4 is what we have mentioned there. Fixed asset amounts to rupees 10 lakh is something that will be replacing there. Now after that we'll be able to figure out how much is the capital value here. So let's go ahead and do that. So the mathematical calculation that you'll have to do here is that you have to cross multiply, that is 10 lakhs multiplied by 4 divided by 5 will give you the exact value of capital that you'll be dealing with. So the amount of capital that you have figured out right now is rupees 8 lakh. This is the amount that you'll have to take into consideration when you are going to prepare the further ratios, or rather when you're going to prepare the balance sheet and the profit and loss or trading account in this illustration. Now, the next topic that we'll be covering here is fixed asset to total current assets. This is something that has been already provided to us, and fixed asset amount has been already made clear. So using that ratio and the amount that is provided here, we'll go ahead and figure out how much is the total current asset value. So the ratio for fixed asset upon total current asset is 5 upon 7, of which fixed asset amounts to rupees 10 lakh. That means you can easily figure out how much is total current assets here. So with the cross multiplication factor, you'll have total current asset value that will be 10 lakhs multiplied by 7 divided by 5. So we figured out the value for total current asset, which is rupees 14 lakhs. Now using the same information, we'll be able to bifurcate the interior details, or rather we can talk about the details which are related to current asset, because this is only total current asset gross value. Within this you'll have certain items, it may be closing stock, it may be any other item which is related to the current asset, and that bifurcation will be able to figure out once we go ahead with the other ratios which are already mentioned in this illustration. So let's start with the next phase of this, whereby we'll be checking out the ratios that has been already provided to us, and using that logic we'll be using, or rather we'll be further going ahead in solving the rest profit and loss statement here. Now the next ratio that has been provided to us is capital to total liabilities. That means capital upon total liability. The number equivalent to this is 1 upon 2. Now, if you remember, we have already figured out capital value, which is amounting to rupees 8 lakh. The one that has been denoted with the figure A has been already figured out for you, or rather it has been already found out. When the capital amount is 8 lakh itself, you can again find out the missing figure here. That will be the amount that will be moved out into the balance sheet or either into the profit and loss statement. So according to that, we'll have to figure out whether the amount is supposed to be moved into the balance sheet or into the trading or profit and loss statement. So let's figure out with this ratio what is the missing figure that we can find out. So again, this ratio will give you the gross value of total liabilities. Now, if you understand, we have asset side, we have liability side. This value that you're figuring out right now, in the previous ratio, we figured out total assets. In this ratio, we are figuring out total liabilities. That means this is the gross value. There is something within this value itself, like the individual items. It may be creditors, it may be bills payable, it may be any short-term loan. So that bifurcation needs to be done, and that can be done only when you prepare the interim balance sheet or the interim profit and loss account related to it. That is at a later stage. However, the first thing is to figure out as many possible missing figures using the ratios that are already made available to us. So the total liability figure here is rupees 16 lakh. Again, that has been found out. Let's denote it with the figure C. Now the next ratio that is made available to us is net profit upon capital. Again, capital is something that we already know, so using that value you can figure out how much is the net profit, after which we'll prepare the interim balance sheet and see what all items are still missing here. So the amount that we have figured out right now is net profit. Again, this has been used, or rather it has been figured out using the same calculation of cross multiplication. Now net profit here is 1,60,000. Let's figure the interim balance sheet and figure out where are the missing figures, or rather which are the missing figures that we need to find out using the other ratios that are available with us. So this will be a combination of trading and profit and loss account and a balance sheet which will be prepared separately. So trading profit and loss account will be combined together, and after that we'll be going ahead with the balance sheet preparation. So let's start with the trading profit and loss account piece. So in this trading profit and loss account we have only figured one particular item, that is net profit here. So net profit is something that we've already found out. 1,60,000 is the amount. Let's record that. Now if you see in the question, we have been provided with net profit ratio. We can utilize that net profit ratio to figure out what is the sales value here, because net profit ratio formula turns out to be net profit upon sales into 100, out of which net profit is already mentioned here, so sales will be an easy piece. So the net profit ratio is 20% is what they have mentioned here. So according to 20%, or rather using that ratio, what is the sales value is what we have to calculate. So the sales amount is rupees 8 lakhs, the one that is highlighted in red. Using that value you can now start with the other ratios, that is gross profit ratio, stock turnover ratio, etc, etc. Now let's mention this sales amount on the credit side of profit and loss account or trading profit and loss account. Now that we have figured out the sales amount, let's put the other values in place. Like for example, we have closing stock. Closing stock is also a part of the trading account, hence it will be mentioned on the credit side. So let's mention closing stock there. On the other hand, we also have gross profit ratio mentioned here. So let's start with the gross profit ratio and figure out how much is the gross profit, and that has to be mentioned on the debit side of trading profit and loss account. As this is an interim financial statement, or a balance sheet rather, which we are dealing with, we can prepare the calculations, or we can solve the calculations right on the sheet itself. So for this gross profit ratio, we'll be solving it on the credit side of this trading profit and loss account. So let's start with that. So we have figured out that the gross profit value amounts to rupees 2 lakhs. So that is something that will be mentioning down on the profit and loss side, or rather the debit side of profit and loss or trading account. So these are the items that are supposed to be recorded here. Rather, there are few more items that we'll be dealing with, but let's start with the other ratios. Here we'll close this interim balance sheet and we'll start with the new ratios that we already have in place. So to be on the same track, we'll have this page divided into two parts. On the right hand side, we'll have the trading profit and loss account and balance sheet with all the items that we have already found out, and on the left hand side we'll have all the calculations from now on. So let's start according to this. So if you can see in the format, this is the basic format that we have with us, and according to that we have found out these many values. Now using the other ratios like the stock turnover ratio, etc, we'll have to figure out what other values can be figured out here. So sales turnover ratio, or rather we can talk about stock turnover ratio. The formula for this is sales upon stock. The value for the same has been provided as rupees 10, or rather 10 times it is, which has been provided here. We'll use that and figure out how much is the stock value. So the formula that has been mentioned here is 8 lakhs upon stock is equal to 10. So if you figure out the difference here, that will give you a value of 80,000. So basically, the stock has gone up by 80,000 rupees. So if the closing stock is 1 lakh itself, and if the stock has gone up, that means the purchases have gone up by 80,000. That means the difference between 1 lakh and 80,000 will contribute to the evolution of opening stock. That means here the opening stock is 20,000. So now that with all the ratios being utilized, we only have to start balancing the trading account, profit and loss account, and figure out what are the balancing figures here. So let's start with the trading account now. So if you can see, the credit side of trading account shows us a total of 9 lakh. The debit side of the trading account shows you a balance of 2,20,000. That means the difference between 9 lakh and 2,20,000 will be mentioned on the debit side here itself of the trading account. That means total of 6,80,000, because 2,20,000 subtracted out of 9 lakh will give you a balance of 6,80,000 here. So this balancing figure can be mentioned as purchases because that's the only possible option. Now that we have figured out the trading account completely, let's go on to the next phase, that is profit and loss account. Gross profit that was found out in trading account has to be moved forward to the net profit, or rather the profit and loss account. So it has been mentioned on the credit side as gross profit 2 lakh rupees. Now there are no other items that are supposed to be recorded in profit and loss account, hence that will be the balancing figure. That means 2 lakh will be the credit side total, and the balance figure on the net profit debit side, or rather on the debit side of profit and loss account, will be something that we are looking out for. So if you can see, net profit is 1,60,000. That means debit side is falling short of 40,000. That can be called as expenses. So now that the balance sheet is only item which has to be prepared, we have already prepared trading account, we're done with the profit and loss account treatment. Let's start with the balance sheet on the next sheet. So we've prepared the format for balance sheet. Let's start posting the amounts that we've already figured out, like closing stock, net profit, etc. Now if you see on the asset side, we have already figured out the value of total current assets, out of which current asset includes closing stock as well. That means whatever balance we have, if the total current asset value was 14 lakhs that we figured out of which closing stock being a part of current asset takes away 1 lakh from it, so the balance will be 13 lakhs, which is a part of total current assets. So let's mention that. On the liability side, we have mentioned net profit as 1,60,000. Always remember, whenever net profit is being mentioned on the credit side, or rather on the liability side here, that means that much amount is getting taken away from the capital balance. So whatever opening capital you had amounting to rupees 8 lakhs in this question, out of that 1,60,000 has been taken away, because this net profit will go into reserves, and that apportionment has to be done out of the capital balance. So if 8 lakh is the opening balance, the closing balance of capital will be 8 lakh minus the net profit. Here it is 1,60,000. The answer that you get here will be the part of capital. So for this illustration, 8 lakh minus 1,60,000 will approximately give you 6,40,000, that being the capital amount. The reason why this is done is because usually students make error of putting the same amount, that is the opening balance and the closing balance will remain the same. However, that isn't the scenario. Hence, if you are putting capital amount as opening balance, then the closing balance will change. However, if the question has already mentioned or has provided you with the detail that this is the closing balance of capital, then don't do any deductions, just put that balance itself, because eventually the balance sheet will tally automatically, because the reserves will be apportioned automatically through that. However, if that hasn't been done and if the opening capital balance has been provided to you, make sure always deduct the amount of net profit from that capital balance, else the question will be completely wrong for you. So figure out the balance sheet has been tallied to 24 lakhs. Usually, as a matter of fact, when you're dealing with ratio analysis and when you're trying to figure out the missing figures, and if the complete format has to be prepared, you never go ahead and tally the balance sheet, because usually it doesn't tally, as not all the information has been provided to you in the question. Hence, tallying the balance sheet becomes irrelevant. However, you can try tallying the balance sheet. If it matches, that means the liability is equivalent to asset. That means everything was already provided into the question and that was according to the need of it. However, if it doesn't tally, leave it blank, need not tally. That's just an optional part on you. Hence, here we close this up, or rather I hope you understand what exactly we're trying to figure out when it comes to the preparation of trading account, profit and loss account and balance sheet, using only the ratios or analyzing them for further enhancement of these specific ratios, or turning them into prominent values. Like, it can be net profit, gross profit, actual sales, it can be the balance sheet items as well. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.